When you set up an LLC, you don't want to commingle funds between your personal account and your bank account. But what exactly is commingling, and what can you do to avoid it? I'm about to explain it to you in this video. I'm Ted Sutton, and this is Direct Answers from Corporate Direct. Now, before we get started, please make sure to like, subscribe, and leave a comment if you have any general questions about anything. So what exactly does it mean to commingle funds? Well, commingling funds occurs when you mix personal funds and business funds into the same bank account. When you set up a business, you're going to need to make sure to set up a separate bank account for your business income and expenses. On top of that, you're going to want to separate your personal bank account solely for your personal expenses. And when you do this, it shows that there's a sufficient separation between your personal bank account and your business bank account. So why is it important to never commingle funds to begin with? If you own a business, there's a high likelihood that your business could be sued. However, that person could try to pierce the corporate veil to hold you individually liable. But in order to determine if you're going to be held individually liable, courts look at a series of formalities to make sure that your business and your personal assets are completely separate. And in a lot of states, the first factor that they look at is whether you set up a separate business bank account for your business. And if this factor cuts against you, meaning that you use one bank account for your personal expenses and your business expenses, it'll be very easy for that court to pierce the corporate veil to hold you individually liable. But if you think about it for a second, it kind of makes sense. If you have a business and somebody sues that business, but you only have one bank account for your business and your personal expenses, obviously it makes sense that they're going to collect from that one bank account. However, if you have two separate bank accounts, one for your personal expenses and one for your business expenses, it'll be much less likely for the court to pierce the corporate veil to hold you individually liable. It's very easy to set up a business bank account, and you're going to want to make sure that you do it from the start, because if you don't, that corporate veil could very easily be pierced. But if you set up a separate bank account and you follow a few other formalities, like having an operating agreement, keeping minutes of your meetings, and other things that are on the formalities list, then the corporate veil will most likely not be pierced. So what exactly can you do to avoid commingling funds to begin with? Well, when you set up a business, you get an EIN number from the IRS. You then take that number to a bank and you open up a business bank account for the business. And if you have these two separate bank accounts, then the likelihood of you commingling those funds is much lower, especially if you run all of your business stuff through your business bank account. So, to sum it all up, commingling pretty much means mixing. And when you own a business, you're going to want to avoid this at all costs. I'll see you next time. Hold on, I'm not done yet. If you're looking to start a business, click the link in the description below and schedule a free 15-minute consultation with us. Also, make sure to check out the Corporate Direct website and subscribe to our newsletter, where we'll send you a lot of good information on corporate law amongst other things. And as always, make sure to like, subscribe, and leave a comment if you have any general questions about anything. I'll see you next time.